Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted today to be joined by Rui Florencio, Chief Financial Officer at BGN. Rui, thanks so much for joining us today.
Thank you for inviting me. It's a pleasure. Thanks.
Great to have you. Well, it's been a really, quite an exciting time, hasn't it, for trading firms in general, as it always is. But a very volatile time, perhaps too volatile this time around. I know that traders like volatility, but I think the uncertainty that has been triggered by, the macro picture, let's say, and tariffs and all these moving parts, perhaps has been a bit destabilizing for the trading community. Would you agree with that? Or have there been advantages, pockets of advantage?
Indeed, it's usually volatility brings advantages, right? That's our nature. When things are flat, that's not very interesting. When something disrupts, that creates opportunities. But this time, when I speak to all our traders, they're all on the same page. They all say this disruption, it gets disrupted every half hour, and nobody can predict how it will go, where it will go. So what you see is that, first of all, our business is a lot from producer to end user. So we are a little bit less
more
on
physical.
We are physical, and we're less on the pure arbitrage business. But obviously we do huge volumes. But what we see is that when we look at the market itself, it's much more quiet. So what you see is that the basic gets shipped but it gets traded less. So
interesting.
You buy it from origin, you bring it to destination. Well, maybe in the past, halfway, you could say, you know what, I'll sell it to A, and what I need to deliver at destination, I'll buy it from B. So that A and B are a bit gone. So the start and the finish is still there, but it's just more quiet. The market is more quiet,
well, and that's that you would attribute that to essentially the demand is quieter, right? Demand has dropped.
No,
is
the
that
real
what you're
demand,
saying?
the real demand is quieter, but that is not yet at a level where it really affects the physical volumes that much. But it's a trade in between. Let's say the trade without a function, where you buy for the sake of buying because you can sell it at 5 cents higher. Those players are more quiet, and the few traders we have that do that are also more quiet. But let's say the ultimate physical demand is still relatively there. It just gets shifted. Some people just don't trade to certain countries because it's difficult because of tariffs. But it's more the quietness is more obviously in the trading environment. You have the buying from the producer and the selling to the end user. That is largely still in place. But what happens in between, where a margin gets made because of the market being disrupted, that is just very quiet. Yeah.
Oh, well, what about, but what does impact producers and the end user to an extent are also now we talked about trade, but geopolitics in terms of geopolitical risk, new shipping lanes, shipping routes, rerouting, which again is becoming the norm. It's nothing new to the oil trading industry. But do you think that is still, playing a big part in the uncertainty, and how are traders sort of expected to adapt to that, if at all, in a different way?
Well, look, adapting to that is our function in the market, right? So it's not something that is unwelcomed, right? It creates stress to an organization when it happens, because everybody goes into a mode of how do we solve this? But usually it are the solutions that we are able to provide. A producer cannot provide it, and an off-taker cannot provide it, but the trader can provide it. So those type of disruptions, like the shipping lanes, and they are unwelcome the moment they happen. But at the end of the day, they create, again, a little niche function if you're able to deal with it. So that's fine. But I would say the macroeconomic events which are now triggering the world, so with the US administration and the rest of the world, those are the type that we don't like that much, right? Because
Yeah.
that's destabilizing. But the rest, it's what we are made for. So it's a very double-edged sword, right? So when it happens,
Absolutely.
nobody's happy with it. But then
Yeah.
once you solve it, you're happy because it's your function. Yeah.
How about, I mean, one thing that does help traders in the whole really value chain is trade finance, doesn't it? I mean, that facilitates and makes
Yeah, of
everything
course.
possible,
Yeah.
especially when we're talking about large amounts of money. Has the macroeconomic uncertainty generally, the global macroeconomic uncertainty, had an impact? Higher interest rates obviously is still there, on the
Yeah.
trade finance side, and how is that impacting
Not
your
not
trade,
y-
if you like?
not yet, not yet. So
As
we are
well,
very
not
well
yet.
very well
Mm.
backed. So we have almost 4 billion of credit lines, and they're all there. Pricing has
Okay.
not gone up. Um, you see that most of the banks that we have or other companies have their long-standing relationships dedicated to this market. So up till now, nothing has happened, but obviously that can still come. But I think these are the moments where you find that being well banked is important, right? So you need to,
Of
in
course.
trade finance, you need to be overbanked, right? Because not every facility is as usable. And now with prices going down, you see that utilization of facilities go down. But you do see a shift in banking in general over the past 10 years. So my previous job, I was global head at ABN for both metals and energy when ABN was top three global trade finance bank. And then you had the smaller banks, which were by the traders not taken too seriously because they were small. And then, I mean, we would give lines to big companies about 10, 20 fold of what the smaller banks could do. But what you see is that with a few big banks pulling out, like ABN, BNP in the past, those people have gone to the smaller banks. And now the smaller banks are actually, they have increased not only their numbers, but especially their quality. So what you
Okay.
see now, the
Yeah.
big difference in trade finance banks is where in the past you would use five big banks mainly or seven, and the rest you wouldn't care about. Now all banks are relevant, and almost all banks have gotten a
Mm.
certain quality. Yeah,
Okay, and what about, and is the cost of shipping impacting things at all? And obviously, you've seen from
yeah,
both a tariff impact perspective on normal containers, but of course, fuel tankers have had a good time of it, haven't they? Because of all the rerouting. But that's also impacted, for example, insurance on shipping because of the risk factors.
yeah,
So
yeah.
how is that all feeding into the
Well,
trading
if you
equation?
look at what happened recently, I would say that the one that has most impact on our profitability at the moment is shipping. Is
Mm.
freight. We own 14 ships, 14 VLGCs. So that's about we do that mainly in JV with producers or sovereign wealth funds. So that's a portfolio of 1.5 billion of ships. Now those are obviously were long shipping and freight rates have dropped. So there you see that the profitability of the trades that use those ships has diminished. So freight is actually something that and I was yesterday at a conference in Amsterdam where we actually won a Deal of the Year prize, which we're very proud of.
Congratulations.
Yeah, at TXF in Amsterdam. And I was talking to a few other large traders, and they all freight is the hot topic at the moment. Um,
Okay.
so
Yeah.
it's more than the pricing and disruption. It's what's happening to freight because freight's going down. So if you are long freight, um, you get hit there. So yeah,
Yeah, yeah, interesting. That's interesting. That's obviously something that is very dynamic at the moment. I mean, looking a bit more long term, Rui, in terms of, the investments that, shippers are making and trading firms really who are trying to ship this oil, balancing this with the investment of what you're doing now with sort of taking into account energy transition, whether it comes to the fuels that go into those ships and how that impacts the
yeah.
trading of those, and also, the conversion of ships, if you like, for that. I mean, how disruptive is that going to be, do you think, going forward? And how can firms plan
No,
ahead for that?
well, I
Mm,
don't think it's disruptive enough for the
mm,
sake of the world, because
right.
when you look at ESG, it has three letters in it, and it's everybody talks about the E, but sort of forgets the S, which makes it sometimes difficult, in my opinion, because um, to deal with poverty. you can only deal with the E once you've dealt with poverty, because E is a bit of a luxury good, which is a pity because you can only deal with the E if the whole world adopts it. So what you see is that the poorest countries, they don't have the luxury to adopt fully to the E. So sometimes I think it's a bit harsh because you need to sometimes help out the poorest farmer in the poorest country, and that is not by driving a Tesla. So that makes it difficult. But what we do, obviously, we're the biggest LPG trader in the world, which is a transitional fuel, which is used for households in most emerging countries. We are looking to go further down that value chain if we have a good opportunity. We're expanding in LNG. We have our first ESG report ready. We're measuring our emissions. My personal opinion, but nobody agrees with that because it will make our life extremely difficult. And it's almost impossible to do, is that the largest emissions in our value chain act before we buy the goods and after we sell the goods. So it's when it's produced and when it's consumed, distributed. And the responsibility of our market at this moment is limited to the phase where we own it. So obviously we have converted some of our ships to be more efficient. We deal a lot in LPG. We have outside our company and our investment arm, we have big solar projects that we are launching. So we're doing all that, but I think as long as, because I remember when I was at the bank, we went much further. The banks went into the producers and put certain requirements on those producers to adhere to certain
but those are even dissipating, aren't they? The banks are even loosening up their controls a little bit, aren't they? I mean, the energy transition is taking a bit of a backseat.
And the pressure from NGOs has been such that instead of it's actually it's gone in two directions. It has loosened up a little bit. It has become a little bit more realistic. I compare it a lot to compliance. When compliance first came, it overshot, and now it has matured. Okay, it's a lot of work and people complain about it, but actually it's a very mature part of the market, the way people assess compliance and the risks involved. And sustainability overshot, and it's normalizing now. But I think what is more worrisome is that some NGOs have put so much pressure on certain banks that instead of taking, for instance, the 10 best steel mills in China, who are still very polluting, and helping them improve, it's the narrative for the banks is better to not finance them.
Right.
Because then you don't get the pressure from the NGOs. So then what you get is that without the Western push or to adhere to certain standards, then maybe they don't need to, or maybe they do because they have their own agenda on that topic. So I think sometimes people shy away from the topic. They just don't deal with it as deep into the chain. So I think that's actually worse than the shying away. I think banks have relaxed a little bit, but I think they've become much better at it. So they've not become softer, they've become more realistic. So it also means that if you remember, there was a very big oil company that when it all started, basically for every barrel of oil, they would plant a tree.
Yes.
Right. So those things are over. It has matured, and now it needs to be if you want to do anything sustainable, it needs to be circular within what you trade. You cannot
not greenwashing, not exchanging it for something that's across a different continent.
Exactly. Yeah.
Rui, before we're out of time, I wanted to ask you just about one more point: digital technology and how that is, AI, blockchain, etc. Obviously that can be implemented in trading and in shipping and in physical flows. How much is that helping or even hindering perhaps operations, whether it's with physical trade or even mitigating risk in terms of finance?
Yeah, well, when it comes to risk and finance, we don't use it. But what we do see is that traders use it a lot when they're making complicated pricing formulas. They use AI as a tool to help them create their formulas when they're very complicated. So it is used. but it's not all across the company or the industry yet. But and it also depends a bit on the business you do. So I think if you are an arbitrage trader that's looking for very small margins between all types of differentials, then you will make more use of AI than if you're a more traditional trader like us, which really works off a function in the market, a physical function in the market. We don't do paper trading like some others do. And in paper trading, obviously AI can be a great tool. We're still very physical, so we use it more to help us.
Okay. Well,
create
talking about
formulas.
physical, one more question to you then. Maybe the AI will help you. What about the dark fleet movements and how that is, not under control yet, is it? I mean, it will always be there. How's that impacting your operations, if at all? Making things complicated still?
It's something that we've gotten used to, right? So we have very good systems to track that, and we have an excellent team and within compliance, specialized. We have one person actually specialized on vetting vessels, not only from a physical point of view, but from a compliance point of view. And she's a wizard at it. So if there's anything a ship did in the past year, 2 years, which is not correct, she will find it. So we had a ship like that not long ago. We were about to do a trade. It all looked good. The vessel was fine. It was all good. But then she found that a while ago something was, a tracker was turned off for a little while. So then we decided not to do that deal. So what you have is that you need to be more aware. You need to be more conscious.
Vigilant.
You need to take extra steps in order to you need to be more vigilant, and sometimes also on top of that use common sense, right? If goods come from a certain origin, you need extra checks to make sure they're not from the country next door.
Absolutely.
So,
Rui Florencio, Chief Financial Officer at BGN, thanks so much for joining us today on Halftime Talk to give us the trading perspective and keep us up to date. Thanks so much.
Thank you very much.